viewing markets. Neeraj, let me throw it open first before I get stock specific, and plenty of likely movers today, and I'll speak about a couple of them. Neeraj, your take with regard to the market moves, is it a good time? We're seeing broader markets start to participate. What end of the market are you participating in?
Yeah, good morning. Yes, actually, one has been picking up, buying stocks at lower levels. But I think now we're very close to the budget. And though expectations are very low from this budget, but, the kind of FI outflow that we are seeing, I think it's better to see what happens in the budget if there is some measures to control that kind of outflow and then, take a call. I think though there are opportunities across mid caps, small caps also, their valuations are again become better, though which were expensive a year back. So there is opportunity in infrastructure, capital goods space. There is PSU banks have been doing well, so that I still feel has legs to go. So there are opportunities across market cap, but I think one now for a couple of days more can let's see what happens in the budget and then take a call.
Okay. One stock that stood out, there are a few which stood out in terms of numbers. One of them was GE Vernova T&D. The Q3 numbers were just stellar. The revenue growth was 48% YOY. They've clocked a 1,700 crore revenue number for the quarter. 79% is the EBITDA growth they've clocked on a YOY basis. Margins improved from 22% to nearly 27%. And profit nearly doubled, or more than doubled, in fact, on a YOY basis. So you saw very, very strong numbers. Just quickly on to the kind of numbers that this means. It's a record in terms of revenue, operating profit, which is EBITDA, as well as very, very strong margins, maybe the second best in the last at least 5 years. So we've seen very strong numbers from the likes of a GE Vernova T&D. Now, this is no longer a small cap. It's a 75,000 crore market cap company. Neeraj, in the T&D space, is it a space which you're tracking closely? Is it something within that larger power basket that you're liking?
Yeah, I like power space as a whole. Though if you see generation companies in the last 1 year, they've underperformed. But T&D space is one. You still see better results. GE Vernova last quarter also results were good, and this quarter also they strong very good results. I continue to be positive on this space. So but I think now you need to look at broader power space also, power generation companies. And there also I feel there is opportunity because stocks have consolidated, they've corrected, and they are available at a decent valuation now. I think power is one space where you see some demand also improving. So.
Right, Neeraj, I'm going to ask you to hang in there. We've got a bit of a technical glitch with your video feed. Just going to get back.
Neeraj, anything that stands out, especially on the asset quality front, where we're seeing improving trends? Of course, barring maybe one or two, the likes of a Satin Credit Care, you've seen improving trends in terms of credit costs. You've seen M&M Finance improve in terms of credit costs. You believe that now we're going to be in a period, again, more like a bit of a Goldilocks period where rates are now going to be likely stable and therefore margins are going to be largely stable. Credit costs have come off and continue to do so. And maybe we might see more traction in this space.
Yeah, financials have done well. So that is one space. There's just a couple of spaces which have done well over the last couple of quarters. Financials is one of them. What stands out there are the PSU banks. There I feel the kind of performance and the balance sheet that they are sitting on, and they are still improving asset quality. Recoveries are still happening, and they are not expensive on valuation. So I think that is one space where still I think there are more legs. There is still some valuation gap which is there. And even the private sector bank, barring a couple of names which didn't do that well this quarter results, but HDFC Bank was also decent. Kotak or Axis Bank, I think they also doing the valuations why they are not very expensive and they've corrected from their highs. So this is also one space that one can look at. NBFC is one, I think, again, has to be very, very stock specific there. So there you've seen Bajaj Finance has not been able to perform, and which is one of the used to be the darlings of everyone's portfolio. So one has to be very, very stock specific as far as NBFCs are concerned, but there is still a lot of scope left in PSU and some private sector banks.
Okay, interesting. Sagility was the other one. Again, very, very strong numbers in terms of the way the performance played out. The top line growth was at 36%. The EBITDA growth was at 30%. EBITDA margins have come off when you're looking at it YOY, but that was a slightly elevated base in terms of margins. 26% is, when you're looking at the last 10 quarters, probably second, third best in terms of the kind of performance they've clocked. And PAT growth was solid at 23-24%. Now, before I go to Sagility and some of these players with regard to med devices and the like, or BPO services, if I can call it, Sagility is more of that. Kunal, let me ask you with regard to an M&M Finance. How is it looking on charts?
It's been an excellent chart, for M&M Finance, because I remember, I think there was a point where around 250, 270 in 2025 mid, the stock used to take multiple resistances. It was almost a zone where the stock underperformed for, I think, a couple of years in that kind of a band. But the moment, I think, in August or September somewhere, where the stock managed to break past about those 275, 300 barrier, you saw a different move altogether for M&M Finance. The stock completed a huge breakout of sorts, a massive consolidation breakout, came back towards 400 levels. There was a point where the stock was underperforming sub its long-term moving average. From there, the stock came back into a zone of outperformance and was trading at, at its multi-year highs at the 400 plus level. So now I think the stock has again gone through a mild corrective phase. I would believe that around this 350, 370 kind of a zone, M&M Finance could be considered as a strong buy, because the breakout which has happened for 2025, followed by a few years of consolidation and underperformance prior to that, indicates that a longer-term revival has shaped up for the stock price.
This RVNL as well, a joint venture has bagged orders worth about 1,201 crore rupees from Northern Railway, SBI Card, like Harsh was highlighting, Lodha Developers. The net profit has seen an uptick of 1.3%, EBITDA jump up of almost 8.5%, which is now standing at 1,415 odd crores or so. Neeraj, curious to get your opinion on realty, because, like we often discuss with Kunal, it's been a rank underperformer, the entire sector, for the better part of 2025. But do you think this could turn out to be a bit of a momentum play, maybe a pre-budget trade, if you will?
Realty, real estate space has been under pressure. Even in, I am from Delhi, so NCR also market has been under pressure. You saw, very swift up move before this, lull period which started last year. I think there, one would have expected that interest rates being low, some demand pickup will happen. But till now, you're not seeing that kind of demand pickup. That is visible from some of the numbers by DLF also that were declared. So last quarter pre-sales are very low. So one needs to see a couple of good launches and good, reaction to that, and then take a call whether pickup is happening in real estate or not. I think one for investment for a long-term 2 to 3 year period, one can, start accumulating at these levels because they are good levels. They've corrected a lot. But I think for momentum play or just for trading, I'll not really recommend it as of now. I think let the momentum come back, and then I think one can take for.
Neeraj, now in terms of even within the realty pack, there are plenty of smaller players in micro markets, and there are plenty of larger players as well. So and very well diversified. The likes of a Prestige, for example, large player, Oberoi as well. Talk to us about how you would play this. Would you play it through maybe a Keystone, very, very niche micro market catering to Mumbai, something like a Raymond Realty, or would you play it through something which is more diverse, like a Prestige, but at slightly elevated valuations?
I think better to play the niche markets, if you are studying the Mumbai market or the NCR market, if you see revival in those markets, where to play those stocks, because there we've seen more correction than what you've seen in the larger players which are well diversified like Prestige. So I'd rather play the micro market, like even in NCR, there are stocks which are only operating in NCR, and there are some which are just concentrated in Mumbai, Pune. So I'd rather play those micro markets.
Okay, micro markets. That's how Neeraj is proposing to play the entire realty. Have you on the show? We'll let you go on that note. Thanks as always for your time. Let me